Welcome back. My name is AlexBeltran, and as always, I talk real estate and love to share concepts on how you can improve your game in the real estate world as well. Now, a couple months back, I made a video about Grant Cardone's Undercover Billionaire show, and only to find out that people thought that I was hating on him. I wasn't hating on him. I said clearly in the video, if I could have done it better myself, I would have done so already. In reality, all I wanted to do was to point out some missed opportunities that the show could have had to explain real world business concepts. That's it. And today we're diving into one of those golden opportunities, and it's called the novation agreement. Grant Cardone used the novation agreement several times throughout the show, and it's arguably one of the reasons why he was able to succeed in so many different areas. If more people understood this concept, they'd start seeing business potential everywhere and might even find the missing piece that they need to kick off their next endeavor. Of course, before we dive in, please hit that subscribe button. I promise you this video is going to proceed right along whether you do or you don't, but I'd still greatly appreciate it. So what is a novation agreement? In simple terms, a novation agreement allows you to control a profit from an asset without actually purchasing it outright. Real estate fix and flippers, listen up, because this is actually the correct way to fix and flip property without having to pay unnecessary taxes. Now, I can feel the tension in the air. I can feel you saying, how do I purchase something without actually buying it? And for that, let's break it down with the example of Grant Cardone and the Jeep Wrangler, or the Jeep Cherokee. I don't remember what it was. And before I show you the video, let me quickly just go through this little bit of a thought experiment, right? Let's go through the process of actually buying a car. Imagine that you want to buy a car with cash, no financing, just straight up cash, right? Typically, what would you do? You'd find a car, negotiate the price, pay for it, get the keys and the paperwork, insure it, and then head to the DMV or whatever the equivalent is in your state and register it under your name. Pay the fees and the taxes, bada bing, bada boom, you got yourself a car. And you just drive it till the wheels fall off. Simple, right?
It's a good looking Jeep. It's for sale with no phone number on it. Must be Ryan's. It's gorgeous. Love to be riding around in this bad boy. A lot better than what I'm driving. Maybe I could turn this into cash. I'm gonna cut a deal with Ryan right now for that car out there. That's my goal.
This is how I'm gonna make some money, okay? I'm gonna get Ryan to hand me over the keys to the Jeep.
The Jeep. Mm-hmm. You wanna sell that?
Oh yeah, that's the Jeep, ironically, I bought for my wife, but it's not good in the snow at all.
What year's the Jeep?
Jeep's 2019.
What do you want for it?
I'll sell it for what I have into it, really.
Can I sell it for you?
Yeah,
Okay.
liquidate.
I'm hooked in. Once they're ready, I'll bring them to you. You close the deal. I don't want anything.
Okay, well,
Okay.
I appreciate that.
I'll keep it washed, clean. I'll have it ready for sale. Because it's not going to sell sitting there.
I'm good with that.
I won't put more than like 10 miles a day on it.
That's fine.
Okay.
I'm gonna roll around this Jeep under the pretense or the illusion that I'm gonna sell the Jeep. If I sell it, I'll pick up 3 or 4 grand. If I don't sell it, at least I'm rolling better.
Interesting, right? Grant found a Jeep, negotiated directly with the seller, negotiated the amount of miles that he can drive the particular vehicle. He said he would wash it, market it, and ultimately sell it, right? All without having to go to the DMV and registering this expensive Jeep, which is something that he was going to hold on to something short term anyway, right? Now, I don't know the actual numbers, and I'm going to keep this as simple as possible. The Jeep owner must have asked something like wanting $20,000. Grant comes back to him and says, okay, realistically, what do you really want for this thing? The seller maybe says, I'll take 17 and I'll be happy, right? So Grant comes back to him and says, all right, cool. I will guarantee you those $17,000. Anything I make above that is my profit.
Okay? I'm gonna see if I can sell some other stuff that I don't own, but somebody else owns and I control. So I'm building up assets.
That's a novation agreement. Grant essentially purchased the Jeep for $17,000, but in reality, all he did was take control of the Jeep without any money up front. Now, I know what you must be thinking. Novation is the solution to everything. Hold your horses, cowboy. Before you dive into novation agreements, you want to make sure that you underwrite every asset and see if it's actually worth your time. In Grant's case in the show, I'm assuming he did his due diligence and it was profitable for him. Let's consider a couple of outcomes here. This is pure speculation once again. Missed opportunity. They didn't show any of this on the show. Let's start off with a positive outcome, right? Because we're positive people here. Grant uses the Jeep to get around town and ultimately sells it for $21,000. He gives the seller the $17,000 that he promised him, and he gets to keep the additional $4,000 to do whatever he pleases. That's a positive outcome. And now the negative outcomes, everybody's favorite, right? Let's just say Grant Cardone wasn't able to get that $17,000 and was only able to get $16,000 after everything. Well, guess what? Now he's on the hook with the seller for that additional $1,000. Wah, wah. Hence why you have to do your underwriting and your due diligence before diving into a novation agreement. Get it? Now, this is all pure speculation because throughout the rest of the show, they never brought this topic back up. But man, was this a golden opportunity that they missed to educate the public on what and how novations work. So how does this apply to real estate? Because cars and real estate aren't exactly the same. Well, if you really sort of think about it, the process of buying a vehicle is very similar to purchasing real estate without the DMV getting involved. With real estate, instead of the DMV, you have, the escrow and title or closing attorneys, depending on your state. By using an novation agreement properly, you can take control and profit from the asset without actually taking on the financial burden of purchasing outright in the first place. Just like what Grant did with the Jeep. Now, real world, right? Because whenever YouTubers are talking about real estate, they go into these crazy hypotheticals, and then you as the watcher is like, yeah, but realistically, how would that work? Realistically, in real estate, you'd use an novation agreement with properties that need lots of repairs. Like I said, flippers, this is for you. Now, we all know that sellers are unrealistic and always want more than what their property is worth. No surprise there. And this is where underwriting plays a crucial role in being able to use novation agreements. Now, let's just quickly say you look at all the comparables of a property, right? The comps, and determine that the subject property is worth $500,000 after repair value, ARV. However, in its current conditions, as it stands, it's not worth paying more than $300,000. But the seller has already received multiple $250,000 cash offers and coincidentally has refused all of them. Like I said, sellers always want more. Now, with the power of an novation agreement, you can give the seller his higher asking price while still making all these numbers work for you. You can start to fix the property without actually buying it. We've already covered what that means. But let's dive a little bit deeper into the financial benefits, right? Because that's ultimately what we're here to find out. Now, let's just say you're trying to buy this house the traditional way, the BRRRR method, if you will. You'd be on the hook for commission, closing, down payment, the entire gamut. And typically that adds up to about 10% of the purchase price. A traditional bank, a traditional big bank isn't going to cover you for something like this. This isn't the type of real estate that they like to invest in. So then what do? You're probably thinking, well, then I guess I'll have to do hard money lending. Well, if you have a good relationship with hard money lenders, they normally cover 90% of the ARV. If you don't, usually it's somewhere between like 70 to 80%. So, which ultimately means that out of pocket, you would have to come up with 20 to 30% of the ARV. So let's just say that at $250,000, 20% down, you're looking at $50,000 that just boop, disappears, gone, before you even started. And once you get to the $500,000 price point, commissions and closing costs and everything exponentially grow. Now I know what you're thinking. As a buyer, I don't pay commissions. Well, you've always paid for commissions. You just don't see the accounting on the seller's side, but it's the buyer that pays for commissions ultimately. Now, with the new NAR nonsense that happened, you're probably going to pay for commissions directly as a buyer in one way or another. Damn you, National Association of Realtors! But with the novation agreement, you can offer the seller that $300,000 without that hit of closing costs and down payments. So they net more both literally and proportionally. And you get to take control of the property, make the necessary repairs, and make your profit when you sell the property at its ARV. And this is one of the parts where it gets pretty interesting, and this is where you should absolutely do your due diligence, talk to your CPA or whoever does your numbers, because this is normally where you pretty much get to save a lot of money on not getting double charged, double commissions, double taxes, double pretty much everything as you normally do when you're fixing and flipping a property. Unfortunately, a lot of fix and flippers either don't know or are too lazy to get into novation agreements. That is why I always say that short-term fix and flipping is a sucker's game, unless you properly use a novation agreement. Just saying. Anyway, novation agreements. Is this new information to you? Is this something you've known about but didn't use? Or do you still not want to use a novation agreement? Go ahead and comment in the comment section down below. I'd love to hear your thoughts, and I'll catch you on the next one. Peace.